cents higher, 119.45. That's NYMEX, rather, and Brent trading at 96 cents higher, 117.29. Let's speak to Jonathan Corneville, Asia Director, Hudson Capital Energy. Jonathan, good to have you with us. Did you ever imagine oil would head up to $120 so fast, so soon?
Not really, not at this time of year. I thought it would be there by the end of the year. But what we're seeing is day after day, it's a number of factors, short-term and long-term, just keep hitting the market, bullish factors. It's the strike in the UK, which shut down about 200,000 barrels per day. But also what that did is that shut down a pipeline that goes to a Fortis refinery that shuts down even more capacity. And the original production facility has never been shut down before. They originally scheduled it for a 48-hour strike. It's going to take a lot longer than that to get everything back and running 100%. So there's a lot of issues. On top of that, you have Nigeria, which has always been a bit of a disaster. But now it seems like every day there's a strike or there's a military strike or a terrorist strike. There's always something going on now, and it's very scary, and I don't see any reason for us to come off.
Where do we go from here? 130 or back below 120?
I see above 120, there's really not much resistance. This is just uncharted territory. We've been floating between 115 and 120 now for a couple days now, so there's a little bit of resistance. The market's pinging back and forth. We get through 120, anyone who's short is going to want to get out, because no one's going to want to see, are we going to 100 and a quarter, 130? I don't see us going above 100 and a quarter till after May. I think we're near the top. We've rallied $20 without actually coming off too much. So it's going to be interesting.
Hey, Jonathan, it's Ross over here. What is interesting is those disruptions you've talked about that have caused this latest couple of dollar moves have come at the same time, that the dollar has strengthened. So, you know, that's the first time we've seen dollar strengthening and oil strengthening at the same time. So how long can we have this dollar disconnect, and what are the implications if oil's going up when the dollar's strengthening?
Well, I've always looked at it as I think it's the fundamentals. The fundamentals are bad enough right now that they've gotten us above $100. You had the short dollar, long oil trade that causes a lot of intraday volatility, and that helped to push the market up. It certainly did, but it seems like now the market has legs of its own. It's just feeding off this negative news that comes out every single day. It's a problem everywhere. Russia, Mexico, Nigeria, Saudi Arabia. Just tick all the names off the list, one after another. So it's almost like the fact that the dollar's rebounded a little bit, that's kind of moved into the background, and it's more like people are saying, wow, we might actually have a problem here.
So, Jonathan, Brian Shackman in the U.S., I have another question for you. But so you think there's a bit of a depegging? They're not so much in keeping in step, and is that going to be a trend moving forward too?
I really think it is a trend. As I said, I think the market has legs right now on the bad news that's coming out. The selling the dollar and buying crude, that was an investment flow thing, which is not enough to get the market up to 120. As I said, it causes the market to ping around. You have $2, $3 moves at a time. That's investment flows entering the market. However, we're up near 120 right now. No one wants to get short. We see producers, they're not selling futures anymore. They're buying puts. And what that means is people are coming into the market to buy futures. There's no sellers. There's no sellers of calls. There's no sellers of futures. It's just one direction right now in the market. It's very
well, you know, it's interesting. It's like so they're hoarding the buying power. You know, we saw with food where there's been some countries that have banned exporters. Are we going to see a situation where some countries are going to hoard their oil, and that's going to be another impact here?
I don't think so. I think there is enough oil right now. I think a lot of countries that are experiencing the big demand, they actually have a little bit of a problem on their hands because of the subsidies. I think 70% of emerging markets have some sort of price subsidy. So it's almost like, well, we need to actually slow down our people buying gas without us actually raising the price. So there's a little bit of a problem there that they're not even going to be hoarding it, because then they have to sell it at a loss. They have to sell even more of it at a loss. So it's a vicious circle right now. The people who are demanding it are only paying 11 cents. In Iran, you're paying for a gallon of gas. I mean, it's amazing.
Yeah, John, it's interesting because you mentioned subsidies. I mean, lots of governments in China and India are actually subsidizing or placing caps on domestic fuels. What's the inside story? What are you hearing as to how worried these governments are when it comes to bearing the burden of oil?
They're very worried, but if you look at like China, they're a lot more worried about, not worried, but they're more concerned with keeping the peace and staying in charge rather than losing a little bit on buying oil and turning it into gasoline. So that's not their biggest concern. You see oil trading $200, then they'll start to sweat a little bit. But in the meantime, that is not their biggest problem.
Okay, John, interesting. Thank you very much. It's always a pleasure talking to you. Thanks for dropping by.
Too.
Jonathan Corneville, Asia Director, Hudson Capital Energy. Ross.
Okay, some of the corporate news here in Europe. Britain's largest mortgage lender, HBOS, could be gearing up to announce a rights issue. According to widespread